Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. Okay, real quick. So we talked about the inability to take out the 9-day, inability to take out the 20-day, whether you look at the front month or whether you look at the continuation chart, whatever it is you're looking at. It's an uptrend. It's been an uptrend. It consolidates from time to time. Bears push down into these key areas. They can't achieve, and then they go ahead and just lift it, make a higher high, and they get into an upper band ride, which is the situation that we're in right now. So the high of the moment is 53.2275. Nice follow-through day yesterday, following FOMC on Wednesday. So you have the Fed here, follow through here, higher high. They're coming in a little bit here. And we've traded as low as 52.9375. It had been kind of hovering in this 53.05 to 53.10 area for most of the night, and they just threw it down about 12 handles. So we'll see how it opens. See if are they walking it down to the open, or do they want to make a legitimate run back down towards the 9-day, which, that's great. I mean, I want a two-sided tape. Hourly chart, you can see, look, we came from 52.3675. They've been shelving it with a little bit of a high there, but this is the majority of the afternoon was pretty choppy. They brought it in the afternoon, and then we just kind of bounced while everybody watched basketball. So we're kind of here. You can see, okay, I'm glad I'm kind of doing this now. It's 7:56 a.m. Eastern time as I'm doing this. You can see these Bollinger Bands trying to open up. I'll even zoom it in one. Wow, this is riveting stuff. You can see it opening up a little bit here to the downside. This is an hourly candle. You can see it's been pretty flat all night. If by some, unusual whatever, the bears can follow through for a couple of hours, this can open up and expand to the downside. Where would I expect it to go? I would expect it to go back to the 9-day and test the pre-FOMC price, which is not unusual. The pre-FOMC price usually gets at least one look. The trick is the times where it doesn't get a look, you either get it, usually it happens within the first 24 hours, but if you get to the point where you're 48 or 72 hours away, what we've seen more often than not, whether you're talking about a tape that wants to run away to the upside, or like back in 2020 and even a little bit last year wants to run away to the downside, it's bye-bye. And we'll figure out where that pre-FOMC price is the next time the Fed meets, so we can move the line on the chart. Literally. Just don't see it again. So this is a pretty important day for the bears if they're going to demonstrate, hey, you know what? 22.75, you had your band ride. We need to bring it in and find some value. Take it back down, retest the 9-day. I would expect the weekly pivot, obviously, to lift up into next week. And then what I would see is next week is going to be another opportunity for the bears to deal with a 9-day and weekly pivot. 9-day, weekly pivot. 9-day, weekly pivot. Probably somewhere up in this area. And see if they can, convert it this time to resistance and bring the market in. If they can't, we know what's going to happen. We're going to go make a higher high. You might not want to hear that. You might not like that, but that's exactly what we're going to do. So you can be short until the part where they screw up, and then you can be long for the part where they go make a higher high. It's, I've been saying all week, it's just it is such a more efficient way to exist as a trader versus trying to outsmart the market all the time. So that, 2 times out of 10 you feel like a genius, the other 8 times you're just adding the losers and trying to, adding the losers and adding capital to what's left of your account, literally, while telling people that you're early. I mean, can we, get out of that rut. Get out of that rut. And if you're wondering how to get out of that rut, we would love to help you. We would love to help you. We don't trade like that. We don't trade like that, and we can teach you how to not trade like that. So for today, you got volume weighted average price, 43.05. Hourly mid, 43.05. Proprietary moving average, 43.07. Daily pivots, 53.08. So 53.05 to 53.08, that's going to be, if it's not ready to break down, that's where it's going to revert back to. And we can expect, this to continue on for another day or so. It could be a day or two. You got to remember, in this move is, not quite 100 handles pretty rapidly. So it's due for one of these consolidation phases. All right, that's all I got. Everybody have a fantastic day, fantastic weekend. Be safe, take care, trade them well. Hoop starts at 12:15. Talk to everybody later. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.